Hi, thanks so much for joining in. You're watching NDTV Profit. My name is Mathew, and this is Ask Profit. This is the show, as the name suggests, that gets you answers to all of your stock-related questions, whether it is fundamental long-term or, in fact, a technical short-term trade. You can send your queries to us on any one of our social media platforms, or in fact on the WhatsApp number that should be flashing on your screen right now. In fact, you can even call us on that number. We will try to take your questions, but as is the case that normally happens, we get a lot of questions on our social media platforms itself. But to introduce you to the experts that are going to help you out today, we've got Kunal Rambia of The Streets, and we've got Lancelot Dicuna, who is a CIO of ValueX Wealth Connect. Thank you so much to the both of you for taking the time. We will come to you in just a short while. Let me very quickly address where the markets are right now. And the Nifty 50 trading with gains of about 0.6%, very comfortably above the 21,300 mark and not too far away from the all-time high, and in fact the high point of the day as well. You have the broader markets that are also gaining ground, both of them. I'm talking about the Nifty Mid-Cap 150 Index as well as the Nifty Small Cap 250 Index, both of them gaining ground. In fact, the Mid-Cap Index has lost a little bit of ground, but the Small Cap Index is trading with continued gains of about 0.6% or thereabouts. Now, in terms of sectors, you've got the IT sector that has gained from strength to strength over the past couple of sessions. It is trading at the high point of the day and up as much as 4% or thereabouts. And most constituents, if not all of the constituents on the Nifty IT index gaining. In fact, yes. So all constituents on the Nifty IT gaining ground. You have Coforge that is up about 5%, Persistent Systems up as much as 6%, Infosys up as much as 4%. So if you've got questions on the IT sector, then do remember to write to us. In the meanwhile, let's turn attention to the focus, which I believe is on the railway stocks.
Yes, railway is the focus for today because the stocks are buzzing, and reason being that the government has said that it's gonna come out with the 1 lakh crore rupees. It'll spend 1 lakh crore rupees on railway wagons. Based on that, a lot of railway stocks are buzzing. If you look at the specifics, there are 2 order wins as well within this, which is one is Jupiter Wagons and one is Texmco Rails. They both got orders worth more than 1,000 crore rupees. And if you look at the how these stocks are doing, Texmco is up 5%. Genus Power is logged in upper circuit, also up 5%, followed by Titagarh and IRFC, both over 3% up. Now I'll direct these questions to our experts. I'll come to you, Mr. Dicuna, first. We have already seen a lot of run-up in these railway stocks, but there is this factor that the fact that these are government stocks, or government companies rather, while they have very strong order books, there is a factor that the payments there's a delay in payments because these are coming from the governments. So do you see that sort of affecting these companies, and do you expect an upside going from here as well in the stocks?
Well, yes, as you said, the working capital cycle or the working capital of these companies does get affected, especially because of the payment structures. Typically, a company receives around 15% payment upfront, at the time of bagging the order, and thereafter once the execution is completed, you will start seeing the payments, which are mostly rear-ended. So the working capital cycle does take a little longer, for these companies. And that brings down the overall return on their equity, because obviously profit margins also will get dampened a bit. So that does have a impact. But then when you look at the valuations, I think everyone is looking at the future and the expected, future returns or growth in earnings that these orders can bring to these companies. So at the moment, based on the valuations, I think a lot of these are already factored into the price, and the upside from here can be limited. But what may happen is, in case there are delays in implementation or there are delays in the execution of the orders, you may see temporarily during a quarter, you may see a downside, and that would give you an opportunity to, accumulate these stocks, because the structural long-term story is still very strong for the next 3 to 5 years. there's going to be consistent, order growth as well as consistent profit growth in these companies.
Okay.
So one would have to wait really for a correction before making investment. But yes, these are sectors where the growth visibility is very high.
But Lancelot, just to very quickly follow up on that, which of these would be your pick? Would you pick something like a Jupiter, which is just won an order, or would you pick something like an IRFC?
So, I think the better option, if you're looking at IRFC, is in the financing space, and a company like Jupiter or Titagar Wagons are in the manufacturing space. So obviously manufacturing would be a better option, but Jupiter has really jumped up significantly, and while it has got orders, it will take time to execute and scale up. So I would probably look at something like a Titagar Wagons to add to. And the other interesting space or the other interesting play in this space is a company called Timken Bearings, where almost 50% of their production and sales goes to the railways in terms of tapered bearings. So that's another one which one can focus on and keep looking at.
Fantastic.
And being in the private sector space, you'd probably get a little better return, based on the financials, the return ratios would be a little better.
Got it. All right, Kunal, very quick view on this space, and then we'll quickly turn to the questions which have already started piling in.
Morning, Alex. Morning to everyone. So if you look at the last 1 year performance of IRFC or say Texmaco or RVNL for the sake of it, then I think these counters have been more than 6 times returns, right? And these returns have been phenomenal. So if you ask me about the new entry in this counters at the present level, I would be a little scared. Though they are trending counters, but the risk-reward ratio from midterm perspective definitely remains negative. So out of this entire space, I would not really be keen to pick up any of these because of unfavorable risk-reward ratio, but a bit of correction from the present level or a kind of a sideways consolidation on the charts would be, I would be keen to watch out for. The only counter which I like in the whole space, though it's not directly related to this, is that IRCTC. I think this counter has given the breakout on this present month. The breakout was at around 760. It's trading at 785 right now. I think that counter can be watched out from the midterm to positional point of view. The stop loss on this can be 750. And the levels which I'm watching out on the chart right now are around 875 to 880 kind of levels. So this is the preferred pick as of now. The others counter, I would wait for time being to initiate the longs.
All right, fantastic. Let's jump very quickly into the questions. We've got Gaurav Tyagi, who's got the first question today. He's writing in from Ghaziabad and asking about CAMS. And, this is another stock that has gained very tremendously over the past several months. He's bought at levels of 2895 and he's bought as much as 10 shares and he's looking for the next 2 years. So it's not really a short-term query. This one's for you, Lancelot, therefore. So should he add at these levels? He's lost a little bit of ground. It's currently trading at 2721 or thereabouts. Should he buy at these levels?
I think even at these levels, still it is a little expensive, considering that the growth potential is already getting factored into the valuation. So if one wants to buy, then it's better to wait for some correction and then buy. And if you have a very small position, then you can maybe add another small position at this level and be prepared to add some more on the further decline.
All right. Next up, we have a question from Sanjeev. He has written to us on YouTube and he's talking about UPL. He's bought shares at an average price of 679. Now, the current price is below the buy price of Mr. Sanjeev. It's in this situation, Mr. Diguna, I'm going to come to you first on this. On UPL, should he continue holding the stock?
So, if you look at the overall structure of this counter, I'm sorry, I think this question...
Go ahead.
Yeah, I'm sorry. So if you look at the overall formation on this chart, the counter is clearly making the lower top, lower bottom formations. Though we recently saw the traction, the counter bounced from 521 kind of levels to 610. But still, I think this downtrend is intact. I would request our viewer to just hold on for now because this traction is really strong. But the momentum is yet to pick up and the trend is yet to reverse. So wait for a couple of weeks. See the consolidation happening on the chart. I think once this entire downtrend comes to an end, then I think, I would advise him to average out the position. But for now, I think he can hold on to the position, and the stop loss which he needs to keep in mind is going to be around 575 levels.
All right, Mr. Dikuna, is that your view as well? Should he continue holding it?
Yeah, so just to give you a perspective of UPL and what's happening on the fundamentals there, UPL actually has almost 80% of its business coming from global markets. So they operate in 18 countries globally, and 80% of their revenues as well as profits actually come from the international operations. Now, a lot of that is linked to the global demand and the global growth that we are seeing, and because in the past, there has been a view that global growth is slowing down because of various climate issues. It's impacting the agri-input business. So that has, been negative for the company. Also, they took almost $3 billion of debt to finance Aristo, which is to make them now become the fourth largest worldwide player. And they have been in the process of paring down the debt through selling of certain assets and liquidating it. But when interest rates globally started to rise, that would have a negative impact on the company. And recently, since now rates are looking at easing up, the Fed is looking at maybe not hiking rates any further. So there is a view that the impact of higher interest rates may not be that high on the company, and that's why there's an improvement in the price. But we need to wait for the next 1 or 2 quarters of results before you can actually say that, okay, the worst is over for this company.
Understood. The next question is coming in on Cyient DLM, which is on a tear today. It's up nearly 5%, and we've got Manish Kumar from Bagpat who's writing about this question, and he's bought at levels of 707. Kunal, this one's for you because he's looking to hold only for the next 1 month or so. What levels should he bear in mind? And, should he hold? Obviously, I would think based on today's trajectory, the answer would be yes. But what key levels and what stop losses should he keep?
So yes, certainly, Alex, if I look at the very short-term chart, then counter is looking very attractive. In fact, today's move has shown the new breakout also on the chart. I think this rally might just continue for another couple of percentage points. To be precise, around 5.5% to 6% from the present levels. So maintain the stop loss of 775 and hold on to this position. I think this rally might just continue. But what I would request our viewer is to, once the target is achieved, rather than exiting the position, just get back to our channel again and ask any available person. I think he can give you the new support levels. I think this trend might just continue even for long. So need not to wait for 1 month. I think you can hold on to your position for even long term if this trend remains really intact. So yes, as of now, definitely hold with the stop loss of 775.
All right. Next up, we have a question from Mr. Rajesh on YouTube. He's talking about IREDA. Now, because of there won't be a lot of data on the charts, I'm going to come to you, Mr. Dikuna, on this. The stock is down today after seeing a run-up. It's what, like 3 times the IPO price. But it's down today about 9.5% down. If you can pull up the chart on this, we'll be able to see the trajectory, right? Mr. Dikuna, is it a good time to buy now that the stock has dipped?
Well, I think, if you look at the 3 times rise that one has seen in the price, and even though you're considering a 10% drop, it's still a good time to sell rather than buy. Not from, because this is more like, an IPO pop, right? There was too much demand and the price got, every IPO is trading at so many times. And so one should really not spend too much time because it is expensive. Even at this particular levels, it is trading far above, what HDFC Bank or other stronger players in the space are trading. Second is, a focused renewable energy development agency always focuses only on one sector. So obviously diversification is not really there. It's more a concentrated play. So if tomorrow the sector slows down, I'm sure you'll see very negative impact on, on the earnings of this company. So that leads to higher risk. So when there is higher risk, one should avoid, taking even further risk and look at cashing out when you can.
Okay, short-term query. This is on M&M Finance December 300 call. What's the view on this particular strike, Kunal? We've got a viewer, Yashwant Rajpurohit, writing in from Jodhpur, Rajasthan.
So, Alex, this counter has given a fresh breakout yesterday itself, and the counter was up by around 6.5%. But in today's trade, it's been a bit laggard, and it's retesting the breakout zone because we have only 15 days, countable days in our hand for expiry. I think 13 days to be precise. So, I would advise a viewer to just stay as of now long on it. I think this counter might just give you the levels of around 305 kind of levels, but if this counter fails to move for next 2 days, that's till Tuesday, take an exit because in call we might see the decay coming in. Futures is absolutely fine. You can hold on. The stop loss on this counter can be 283 and one can hold on to the futures. But in case of option, take an exit beyond Tuesday.
I just want to clarify one thing. Kunal, what is the stop loss that you had given on Scient DLM? Was it
775?
But
675. Sorry, 675.
So my viewers also pointing that out, that that's above the current market price. All right, so there you go. Manish, I believe, was the question, was the one that asked the question. The stop loss is 675.
Right, we'll take a short break now and we'll come back and take more questions. Stay tuned. Welcome back. You're watching Ask Profit, and if you haven't written to us but there's a question that you want to ask, even if it's a short-term trade or a long-term investment, do write to us on any of our social media channels or on the WhatsApp number that's on your screen. Now, before not wasting any time, we'll start with the questions again, and this one's from Mr. Naresh Thakur. He's talking about Coral India Finance. Now, this is a small company with the market cap of around 200 crores. Since this is a short-term question, I'll come to you, Kunal, on this. He already has bought the share and he wants to know if he should continue holding for 4 to 6 months more on this.
So certainly, yes, if I look at the formation, this counter is in the sideways consolidation since June 2021. Yeah. The high was around 57. It just went down till around 30-ish level and again back to 57, 58 levels. I think this seems to be the good breakout zone also. So watch out for this level being surpassed. So the breakout level, to be precise, is going to be, say, 60 levels. Once it crosses above 60, I think we can see the levels of 80-ish coming in on chart. So yes, as of now, hold on to this position. Maintain the stop loss, and that stop loss is going to be around 51. So if the counter breaks below 51, take an exit. Otherwise, hold on to this position, and above 60 for the momentum traders, one can add the new position also.
All right, I'm very quickly going to ask the question, and gentlemen, keep your answers, if possible, a little shorter, because we've got a lot of questions piling up. This next one's from Saurabh, writing in from Gurgaon, and he's asking Lancelot about Stovecraft, which is the manufacturer of Scava and Pigeon, basically kitchenware appliances. He's holding 1,000 shares at a level of 590, which is slightly elevated because the price is currently at under 500. Should he continue to hold, and if at all, should he add more?
Well, I think this company is going to do well given the longer term trend in rural, India and the business growth that we are seeing. But I think the price is already factored in, the next 12 months of growth. So one should wait for some correction, then invest in this company, because otherwise your upside from here can be purely based on momentum and not really based on the valuation.
All right. Next up, the question is from Vineet Patni, and he's talking about Mankind Pharma. He's bought at levels of 1,600. Now, he's well above the buy price, but should he continue holding it for the next 1 to 2 years? Mr. Tikuna, I'm going to come to you on this.
Well, I think, yes, 1 to 2 years is a good period to continue to hold this company. Its earnings growth has been good in the last 2 quarters. And I think the outlook is also good as far as is concerned, so one should continue to hold on to the stock.
Okay. The next question is from Muthukumar V, and he's asking about Glenmark Life Sciences. He's bought at a level of 624, and again, he's looking for a long-term view. I'll come back to you, Lancelot. What's the view on the fundamentals?
So I think the fundamentals are that, the life science business is doing better, especially because of the new molecules that they've been coming out with. So one should continue to hold on to this stock, even though, there may have been a decline over the last couple of months. I think the business is now on a turnaround space, and with more and more approvals coming in from US FDA, we should be able to see some new announcements happen on the drug discovery state.
All right. Next up, we have a question from Mr. Amit Rastogi. He's talking about PVR Inox share, and he's bought it at 1,140 levels. Should they switch to another stock? That's the question. So this is for the longer term. So, Mr. Tikuna, PVR Inox.
So I look at, I think you have benefited a lot, and going forward, while there have been quite a few blockbusters, at the exhibition space, it is going to become more and more difficult for these companies to capture, market share and maintain profitability. Mainly because of the increasing, competition from the online DT movers. So one should look at, booking profits and stay out for a while till there's some serious correction, and that's the time when you can accumulate companies like PVR Inox.
We've got a lot of fundamental questions, but let me quickly try and take one to you as well, Kunal. We've got 197, that is Paytm. We've got Umesh Gupta from Gurugram, who's bought at levels of 1570, which is very elevated, and you probably know when he bought this. He's asking whether he should exit or should he hold. Based on the technicals, are there any signs that there is an upside or significant upside from this point?
See, to be honest, this has been the common query across the media channels. The counter has really fallen significantly from these recent announcements. But this correction is halted at 61.8% of the last move. So yes, as of now, I would say hold on to the position. 590 is a good support to watch out for. If the counter consolidates near 590, I think this can be the good level to reinitiate the buy. I'll not be keen to immediately see the upside. But yeah, 590 can be the good support level. Hold on to the position for now.
All right. This one's from Rashida, and she's talking about SBI Cards. She got it. She got the shares during the IPO, and yesterday she says that the price crossed the IPO levels. Is it a good hold at this level, Mr. Tikuna?
See, while the short-term business is looking good because there is a significant growth in the credit card debt, and SBI Cards makes most of its money from financing the credit card holders, for longer-term debt, right, rolling over into the longer-term debt. But at the same time, with this huge growth in the debt portion, you are likely to also see a rise in NPAs going forward. So I think the risk-reward ratio in terms of fundamentals, one should not really hold it beyond this, and at this point in time look at exiting and maybe wait for a quarter or two before you start to see what's happening on the NPA levels.
Okay, talk about holding for the long term. We've got Thomas George from Kochi who's bought Tanfac Industries, which he says he's got 100 shares of that he bought at par in February 1984 at the IPO stage. Should he continue to hold or should he sell? The gains, Mr. Dikuna, are in the thousands of percents. So should he continue to hold?
No, I think he should continue to hold because the company is, continuing to grow, and it has grown significantly. And he shouldn't get worried about small short-term fluctuations because he's not a trader or a short-term investor. On a longer-term basis, he will continue to see upside as the company continues to grow. So he should just stay invested.
All right, that unfortunately brings us to the end of this particular edition of Ask Profit. I'd like to thank both our experts, Kunal as well as Lancelot, for joining in, for answering all of the questions that you did answer. There are so many of you who've asked questions. Unfortunately, we've not been able to take all, but we are saving some of those questions. We will be back on Monday at 11:30, Smriti and I, and we will take as many questions as possible at that time. Do stay tuned. Lots more coming up on NDTV Profit.